Hi, friends, and welcome back to another episode of Multifamily Deal Talk. I'm your host, Kevin Parrish, and today we've got a special guest. All our guests are special, as I usually say, but got a good friend in today. So let me read his bio, and then we'll introduce him. He's a first vice president of investments at Marcus Millichap. He's been at Marcus Millichap for over 10 years. He's an advisor specializing in DFW multifamily. He has assisted clients in over 16,000 multifamily units, totaling over 1.2 billion in volume and over 200 plus transactions, which is awesome. He's gotten 6 sales achievement awards, 3 national achievement awards. He's been recognized in numerous periodicals, CoStar, DCEO, and real estate forums here in North Texas. He has a degree in economics from Texas Tech, and he's married and has one son. Welcome, Mr. Ford Brawley, to the podcast. Ford, welcome.
Thanks for having me, Kevin.
Absolutely.
I'm glad to be here.
Definitely. So, dude, you and I go back a ways, don't we?
Long time.
How long has it been now? Probably 10 years, maybe? I think we were Marcus at the same time, but like you were working on one team, I was on another, and then I jettisoned from Marcus, and then obviously you've been there, and kind of when I got on the buy side, started buying deals, obviously reconnected with you, and it's been good. So,
Man, I've loved it. I think last week was my 10-year anniversary at Marcus Millichap.
congratulations.
I appreciate that. So we have known each other for about 10 years, but I would say we've been pretty good buddies for the last 4.
Yeah,
So
I
it's
agree.
been I've enjoyed that.
And you all sold the deal for us last year, and it went great. So couldn't obviously recommend you guys enough. So glad you're here.
That was a good story. We'll have to come back on.
That's
for that
another
story.
deal. Look, 200 transactions. That's 200 deal talks. So right. So, but I'm excited for the one you brought today after you were kind of telling me about it. So
Yeah.
let's jump in. So I've got one question for you before we talk about a deal. And I ask everybody this to get their take. Why multifamily?
Why specifically for me, or just why for the?
Yes, just like whether you or in general, just a why multifamily.
So my non-superhero origin story was I got an interview with a guy named Al Silva. I had to drive in from Lubbock, so my buddy had to drive into Dallas for an interview. So I bought Commercial Real Estate Investing for Dummies, like the yellow book, like
Awesome.
at the Barnes and Nobles in Lubbock. Rode shotgun, read it the whole way, and so that's the basis for multifamily.
And that's how your whole like college experience was too, right?
Yeah,
So.
pretty much. Yeah. The last minute cliff notes are very helpful.
Yep.
But multifamily in general, I mean, I think it's such a, it's one of the few things that's a true need for everybody is housing, right? And so whether it's affordable housing, luxury housing, I mean, people need housing. So there's always going to be a demand for it. And it's got shorter term leases, so it can kind of ride up and down with the market, be an inflation hedge sometimes. And then at the end of the day, the thing I really love about multifamily is, it's you buy a retail center or something, you have these kind of longer leases, but multifamily it's such an organism, right? Like it's such a more agile ship than a retailer, industrial, and office or something like that. So that's kind of my favorite thing about it is it's a little bit more for the creative person.
Well, that's awesome. I would agree on all fronts. And, it's more, we could obviously unpack all that, but it's more of like a general question just to get your take and why you like it, what your thoughts on it are. So are you ready to talk about a deal?
Let's do it.
That's why we're here, Multifamily Deal Talk. So as discussed, I've created a framework. It's called the SAFE method on how to source, analyze, finance, and exit apartment community investments safely and profitably. So excited to hear about this deal. Let's just run it through that framework, starting with kind of how you sourced it. So fire away.
Yeah, the property is called Richelieu at Bluffview, and now it has a different name. But it was a property that is right over off of Northwest Highway in Loop 12, like right over by Love Field in Dallas, and it's the Bachman Lake submarket, but it's on the other side of Marsh. And so it was kind of a different breed, right? There's not 40 other apartment complexes surrounding it. There's 40 homes, and what was happening in that neighborhood was these older homes from the 50s and 60s were getting knocked over, and there were $1 million homes being built right around it at the time. So it's kind of that Midway Hollow area. But my relationship with the property actually goes back to being a young kid. There's a lawnmower shop across the street, a Toro lawnmower shop. And I remember just about every other weekend having to go there with my dad to fix his like ancient lawnmower. And I would sit out and like kick rocks and whatever. And there's always this apartment complex you
Yep.
could see right down the road. And so when I happened, 10 years later to get into apartment brokerage, one of my first phone calls was to the Richelieu. And the fellows that owned it, their dad built the property in 1963. He had passed away.
Really?
Yeah,
So it was just stayed in the family for what, 70 years, something like that?
correct.
Wow.
Yep. He built
Incredible.
the dad. He came back from World War II, and he had been a pilot, and he believed in flight,
Hmm.
and so he built 4 very nice properties up and down, Marsh and Lemon, right by Love Field.
Hmm.
And so this was the only one that he had kept, and so there were 3 sons, but 2 of them were kind of running it, and they were also running law offices out of the unit, like an apartment, like it was
At the
at the
property.
complex.
Wow.
Yeah, so the
So they're both attorneys.
yeah, there
His
was
dad was in real estate, former pilot,
correct.
and still owned the property and ran another business out of the property
Yeah, they
that
had
wasn't a leasing business.
exactly. They had
Wow.
2 units. They each had their own homes, right? Like very successful men. They're
Hmm.
sharp guys. And but yeah, the leasing office was there were 2 bedrooms in the back. One was his office, the other was his assistant's office, and then the front, the owner or his wife was the property manager as well. And so it was
Keeping it in the family.
keeping it in the
Yeah.
family, right? Keeping it in the family. And they, it's kind of what you imagine. They weren't apartment professionals, right? He was a very good attorney. But it kind of, after his dad passed away, they started taking over, and so he did both. But it was mom and pop management, old units. They'd never really renovated the property a ton, and so when we started looking at it with them in 2015, and it was a generational asset. They
Mhm.
didn't want to sell it as kind of one of the last
So let me stop you. So how many
Please.
units is it?
100,
And then remind us again what the vintage is. When was it built?
1963,
Okay,
100 units,
got it.
big
So,
units too. Average is like
oh
850
wow,
square
okay.
feet.
Now, kind of going, you were kind of laying the land for the location. It's regentrified a ton. Just obviously, you and I both are here in North Texas. There's Target, literally adjacent to the property,
Correct.
and major retailers in the last 10, 15 years have come in, right? So it's like,
Chick-fil-A across the street.
yeah, so it's one of those deals that was, I remember touring it with you, when you guys were marketing it, and it just was one, like you said, it's very unique, right? It's in an older neighborhood, but huge homes are being built, and just it kind of facilitated, needing some attention, which you're going to get into, so I don't want to jump
Sure.
into that, but
No, but you're hitting the nail on the head, right? It was what was attractive about the deal was the location, A, but
sure,
B was the fact that they hadn't, it hadn't been bought 2 or 3 times in the last 10 years, and someone hadn't put 15, 20K a door in
sure,
it. Someone hadn't, the rents were $400 below
man,
crummier properties over on kind of the
I
Bachman
can
side.
figure, wow.
Right.
So did you find that on the rent roll, given that they were mom and pop, and we find a lot with mom and pop owners that this happens, where there are a lot of like long-term residents that had lived there for, you know, 10, 15 years or longer? I mean, what was the
Yeah,
breakdown?
I don't think they were paying for landscaping there. It was everyone had their own gardens, and they were very, very long term. I think I wish I had found the math on this, but I think I had done something where the average tenant had been there for like over 7 years.
Wow.
Yeah, it was very much a family
Got it.
situation.
Wow. That's interesting.
Yeah.
Okay.
So it was unique. I think even his son was living there while we were selling it for kind of like, I think everyone in their family had lived at the Richelieu at some point. And
Goodness.
yeah, but it had 4 great courtyards. It was a really, really pretty property. I think that was the thing about it, was it wasn't just your kind of normal, bricks and sticks. It was very pretty property.
So what was their motivation for selling?
It's unfortunate, but one of the 2 brothers was diagnosed with cancer, and so obviously they had quite a bit of equity. There was never a loan on the property
Okay.
ever, so they had quite a bit of equity in it. And so he had to start making some tough decisions, and the family did, right, because multiple people owned it. It wasn't just
Mhm.
one singular person. So that was kind of the impetus behind it. Sad story, but we'd known them for about 10 years, right? Or 8 years at the time. But they still weren't willing to give us an exclusive listing. There were multiple people kind of that they'd reached out to.
So
And
when was the first time you actually made contact with them?
2014.
And then when you got this assignment, which you'll talk about in a minute, but when you started working on the deal, what year was it?
December of 2019.
So for a minimum, what is that? 6 years,
Yep.
5 years,
Yeah,
five and a half.
5%. Yep.
You just constantly stayed in contact. Like,
Hey, we
Um,
sold this over in Bachman. Hey, this is going on in your
mhm,
neighborhood. Hey, what are you guys up to? Hey, we just sold this, right?
yeah.
This is changing in the market.
I think that is a lesson on, again, we're in the source on the S of the safe method. That's a lesson for even all listeners here. Like whether you're, a professional, you're an investor, whatever you do that is involved in real estate, like, you know, it takes time, right? Like it's not fast. And
Correct.
the fact that you guys spent almost 6 years to even when they were ready, and they might not have been even sellers if the son hadn't had something happen, right? Like that
Totally.
just is. I think that not a lot of people, given where the market's been the last 4 or 5 years, it was really strong. Kind of talk like deals are trading really quickly, you know,
Right.
and you guys just stayed after them, and I mean I respect that a ton. It takes
It
it's a lot of work,
it is a
right?
lot of work.
So, which I think then too, and you'll get into it. I want to hear your thoughts on this, but once you do end up being able to work on, it, I think that provides you a little more kind of passion to perform, if that makes sense.
It really does. I mean, you just become friends with people if you spend 6 years,
Yeah,
talking to somebody. Yeah, unless you hate each other,
yeah.
right?
Well, isn't that how the multifamily business is, right? It's just a very, it's a friendly business, right? Like you want to do deals with your friends, and it's very relationship driven. I guess is what I'm trying to say.
No, it totally is. I think two of the most important things I've learned from my partner Al Silva are kind of back to the prior point of spending 5, 6 years after the
Hmm.
same client. Pleasant persistence is such an important thing,
Yep.
and whether you're in real estate or the gas
Yeah.
business,
Any kind
whatever
of
it is,
sales or
right?
anything, sure.
Even with your family, right?
Yep.
Trying to meet new people, right? It's
Hmm.
pleasant persistence, and then the other things, you get to work with who you want in this business. You
Yep.
get, for the most part, you get to choose who you work with, and that's great because there's some people that you just don't, even they're both great people, you just don't align, whatever it may be. But
You're right.
at the end of the day, you kind of a lot. When we're doing that deal last year, it's like we're kind of
Mhm.
in the trenches, and you're in the trench with your
Yep.
buddy,
Yeah,
right?
you just gotta know that, somebody has your best interest and that you trust them, right? You
Right.
can only know so much about somebody by, you know, meeting them for a year or so. But after 5 or 6 years, I mean, I feel like you guys probably knew them pretty well. They knew you. So,
Right.
okay, so that's awesome. Is there any other kind of deal points on the sourcing of this? Let's jump into the analysis.
Yeah, I think real quick on the sourcing, and it kind of comes back into play later, but we the sellers did not want to sign an exclusive listing agreement with our team. They had multiple
Interesting.
people they were working with, and that was kind of it was an old school mentality, right? And that it's not like these guys were doing a ton of transactions. This is their one real estate
Sure.
transaction outside of their house or office, whatever. But so Al and I kind of sat down about it, and we're like, you know what, screw it.
Yeah.
Let's just let's
So
risk it.
let's maybe just quickly unpack why that's important, right? So as far as an exclusive listing agreement would be where they you become their agent to represent them exclusively in the sale, meaning nobody else has control of this deal. Buyers, et cetera, have to come through you guys in order to purchase the property, correct?
Correct.
And so they didn't want to sign an exclusive,
Right.
right? So how, out of curiosity again for the listeners, how often does that happen in our business?
I mean, Al and I kind of have a little bit different business plan than maybe all of our competitors
Sure.
or majority of competitors, right? But we believe in that process
Hmm.
and bringing the property out to market, getting the exposure, right? And so for us, it was very atypical and especially I think it's very atypical for people to just go out there completely unprotected,
Sure.
right, and market something unprotected. There's a difference between an off-market deal, but we didn't think that the Richelieu was going to get the best action on just a quick, make 3 phone calls off market deal. It
Hmm.
deserved and needed the exposure
Hmm.
because it's a good story. So we decided to risk it, spend 10, 15, 20K, whatever it was on marketing. We brought it to NMHC.
Wow.
We made OMs in the seller. There are 4 other people, kind of doing the same thing, but not to that degree. We e-blasted it,
Got it.
conducted tours, and
Okay. So, and I'm assuming with their permission.
kind of, yeah.
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 So of course, right. But you guys wouldn't have spent that kind of money and time and
Correct.
effort
Yeah. We
if
had a
they
signed
didn't know.
agreement for
Yeah.
a fee if we brought,
Correct.
a
Yeah.
buyer over
So,
X price.
okay. So you guys put the time and effort as if it was, if y'all did have the exclusive,
Exactly.
because you
We
guys
just
wanted
acted
to
as if.
present professionally to the market. You didn't just want to throw mud at the wall and let's see if it sticks, like we say a lot, right, in our business.
Correct.
And just ran a process. And of course, we'll get into how that went. That's what I obviously want to know. But yeah, well, I mean, it's very rare. I would say from obviously being, a former broker, you can do off market deals and, call a couple guys and stuff like that. But having just an open listing where the seller says, I want to sell, just bring me an offer, figure it out. That's super rare. Most guys say, oh, well, I'll sell at this number. Right. Do you agree? And then, you kind of work it a little like, well, I don't know if I can get that number or not, but it sounded like these guys were serious. Y'all felt like it was a good deal and you were willing to put the time in.
Yeah. It's like we had it was kind of 80% going to go in our favor,
Yeah,
not instead of 100%, right?
Those are good odds.
but we Alan and I were just act as if, and if
Yeah.
if we blast this out as the market, I think people will prefer to work with us because we're the ones who are giving them the story,
Sure.
right? So.
Well, look, I would say as far as deal talk goes, like this is a unique deal talk. So I'm glad you brought this deal. Like this is outside the norm as deals go, right?
Yeah,
Even specifically for brokerage. So
totally. Well, and there's a storm coming on this deal that's it's going to line up with what's going on in the world today.
Well, let's jump into so that's the sourcing. Y'all spend a ton of time getting this deal teed up. Tell us why you spent so much time. Like, why did you think it was such a good deal? Other than you grew up going and seeing it, and lawnmowers and stuff, right? So give us that. What you felt like was, hey, the buyer marketplace needs to see this. We think we can perform.
Yeah, it goes back to the fact that it was unprofessionally managed by the same family for almost 70 years, in a location that had kind of come, gone, and then come again, right?
Mm-hmm.
And it was just kind of back on that come around, and their rents were, like I was saying, $400 below 350, 450, whatever you want to call it, below Bachman. Like not even this deal, and then there's 3 houses from front side of the side of the front doorway that were going to sell for over $1 million. They were like spec houses. People just knock over a 2-bed, 1-bath ranch, build a 5-bedroom house, sell it for $1 million.
So at face value, it sounds like, hey, this should be a very good deal, right?
Correct.
So, but now drilling down into your analysis and like putting together y'all's offering memorandum, as you said, and having to underwrite the deal of how you felt it was going to trade relative to the price that the seller wanted. Tell us about that kind of analysis of it.
Right. I mean, it was really the most important part was it had really not much to do with their current cap rate.
Mm-hmm.
Right at that point, it was you can kind of almost throw it out the window to a degree. But it was about where exactly can these rents go? How much money do you have to put into this property? Like these units, some of them probably have not been worked on since 1963,
Mm-hmm.
right? So it's really what it came down to on that end. And what can you sell this deal for? And how do you bring 25,000 a unit to this deal, right? And guess what? There's still
so by 25,000, do you mean renovation?
Correct. Sorry, okay. Yeah.
So
correct.
Let's take one step back. You told us how many units, location, all that. Tell us about kind of the structure. How how it's built, brick, obviously, pitch roof, flat roof. Were there individual systems? Was it a central HVAC system, a chiller?
Right.
Just unpack that really quick.
Yeah, so it was built in 1963, so it was old school construction, right? It had bigger units, but it was pure and
they
beam.
don't build them like they used to in 1963 anymore.
That's correct.
So.
Yeah, that is correct.
They're still built pretty well back then. So.
They were. It was pure and beam foundation, flat mansard roofs, brick building. They had a chiller system for the property and hot water boiler, and it was kind of built. It was just a square with 4 courtyards, and they all kind of wrapped around each other. And then one of the courtyards had a really huge pool, and that was about it. It was kind of a little bit of a motel style, but the parking lot probably hadn't been fixed since 1963 either. It went all the way around the property.
So tell us about the actual physical condition. In my experience, mom and pop sellers usually take pretty good care of their assets because it's their one asset, and they have a lot of pride of ownership. Tell us about that.
Yeah, it was super clean from that. So, like there was no trash. The tenants and the owners, like they just had a ton of pride in the property.
Okay.
Because it was, like I said, it was a family place, and not just for the family, but people who'd been living there.
Sure.
Yeah. For a long time. And so it was always clean. It was always well kept, no crime, nothing like that. Like everyone knew each other. Every time we walked out there, people were like, these people, but at the same time, he's, they're attorneys, they're not apartment people. And so there's no renovation in the units, until close to when we started selling. They did a few kind of upgrades, but kind of base level stuff. But really from a physical standpoint, I mean, it was like the roof was really, really old. There's a lot of like tiny, just wood rot, deferred, things like that, that just, they weren't savvy to kind of fixing all the time. Right. It kind of cut both ways, but the real thing was the interiors kind of looked like grandma's house across the street. Yeah. Right across the street is, a 2012 build apartment complex.
Funny you say that. I mean, I've been to some older deals that people have owned a long time, and you go to the model unit, and it's like, I think I'm at grandma's house right
Yeah,
now.
you are. Yeah, there's probably some
It's
like
just
grandma's
dated
vanilla cookies in the
and
corner, right?
furniture, and yeah, man, it's like, so I typically get excited when I see those kind of deals.
Exactly.
So,
It's opportunity, and it
mhm,
was the delta between the Class A property across the street, which it was that was 10-story wrap. Kind of, it's not a comp per se, but
mhm,
they're running for $900 to $1,100 higher.
okay,
So it's like you knew you had tons of runway between them. So you could the concept behind this deal when we thought about it was like, let's put stainless steel appliances, granite countertops,
mhm,
like somewhere like you or I would be happy to live, right?
mhm,
And instead of getting 2,200 bucks for the 2 bedroom, maybe we can get like the Class A deal is maybe we can
mhm,
get 1,900 or 1,800,
got it.
right? And that was the concept, but they were charging 1,000 for a 2 bedroom
Sure.
at the time. So that was really the concept is take this from kind of a C asset in a B plus A minus area that's
Mhm.
growing and turn it into the affordable competitor.
So back to what you said a second ago, 25,000 a unit. I mean, that's not a small
No, sir.
renovation. So specific to the analysis of this deal, would you call it, we say that there's three types of investments, right? So there's core, value add, or opportunistic. Which one of those would you say that this kind of silo this deal fit?
I mean, it's definitely a value add deal. I think anyone who came in toward it saw the
Really?
property and said, there's so much legs here, right? It's like there's
So do you
everything
think,
added up.
again, like just your purview, do you think that, 25,000 a unit is value add, or is that more opportunistic? Hey,
I
we're
guess
gonna
you
have to
call in
grow
value add like the
rents.
middle cut, like
Yeah,
okay, so
it's a
well
little
then
heavier lift.
yes.
Value add being, kind of a down the fairway. Let's do a quick update,
Oh, okay, so
kind
it's
of deal.
definitely opportunistic
Okay,
then. Yeah,
but
it's
we toured the deal, right? And so we've had success. Obviously, you sold a deal for us just like this that we call it
exactly.
shadowing, right? You shadow the A class deals, but you try to have just as nice of a unit in a good area, right? So I would say that's kind of what you're explaining. So probably leans a little more opportunistic. It's definitely like, hey, there's value here, right?
Sure.
But
Yeah, I kind of
um,
misinterpreted
that's fine.
opportunistic as
Yeah,
like, hey, look, it could be just crazy,
yeah,
right? But I suppose it was, right?
yeah.
I mean, it was like they're getting $2,000 for their two
I
bedrooms that they
I would
actually have
say
left you today.
25K on a reno is kind of crazy. So
Sure,
there's not a
yeah,
lot of people that can handle that, day to day. But
sure. But
continue.
it was very clear that the story was there.
Right.
I don't think any people might have been like, hey, I can't quite get the return or something. Like
Hmm.
they didn't fully love it or hit the vintage. It really is gonna be a lot of work. But nobody went out there and said, you're wrong, man.
Yep.
This ain't gonna work.
Yep.
Right. Not a soul.
Okay.
So it was, I
So
mean,
tell us what the just generally kind of what you guys the pricing guidance was, the marketing, et cetera,
yeah, it
and
was,
and why it made sense for a deal like this. Again, just to kind of wrap up the analysis piece.
sure. We listed it at 10 million bucks. So that was kind of the price we agreed on was 10 million bucks, 100,000 a unit
Okay.
flat. Pretty simple, right? It's like,
But it's larger square footage.
yeah, larger square footage. So and yeah, we went to market and we had 17 tours in 3 weeks
Awesome.
and we received 7 offers. And so we had offers all the way up to 10,350 on that first time. So
Okay, so you didn't have an exclusive, but you still took it to market, worked it, aggressively, I would say, and you still had 17 tours. This is 2019, and you got 7 offers at that time in the market. Would you say that that is that good? Is that kind of okay? I mean, to get that kind of action on this deal, and
yeah,
what, and because maybe it was a little more opportunistic, does that shrink the buyer pool a little?
yeah, it shrunk the buyer pool a little bit. I think multiple reasons, right? Like they're hearing from 3 different brokers on it. And they're like, "What the heck
True.
is this?" Right? So
Okay.
that was already weird. Already, some people are like, "I'm not going to do the older vintage,"
Hmm.
and so, but it was February of 2020 when we were kind of going through all this. But
Hmm.
we felt like it was a pretty good turnout. 17 tours, really the 7 offers too that came in was a good
And
turnout, and
above
we had
essentially what
above
you.
list price.
Hmm.
All 7 offers were above list price.
It's great.
All of them had non-refundable earnest money, and they're all local buyers that we trusted. That was the neat thing about that deal was not a not a single person from out of state offered on the first go around. It was all people
Local.
that just like
They
knew it.
knew.
Yeah, they
Yeah.
felt it, right?
Hmm.
And that's what when you're a real estate guy, you kind of like it when people feel that too.
Yeah.
Yeah.
Well, again, we toured it. I mean, I definitely saw the story and the location, and so
It needed a
okay.
ton of work though. That
So
was
you said something unique here. You said the first time, and then you mentioned February 2020. So
mhm.
Continue.
So this is why the storms come in and why this is a unique deal for now, right? This is a good deal talk story for 2023 as well, because we awarded the deal. I mean, we were all feeling great. It was a buyer we'd worked with before, like good friends, a relationship like this, right?
Mhm.
And Al and I are like, man, we did it. Look at that. Look at us.
Mhm.
And then the next day, Donald Trump, has this big speech like this COVID thing and San Francisco's shutting
Mhm.
down and whoa. And so the buyer calls me. He's like, everything's shut down now. Like we did the best file, but everything's shut down now. And he was like, hey, I can't do this deal. Like, I don't know what weighs up. The stock market's tanked. Like, we're all shut down. I can't even do due diligence. Like, I hear you, dude. Let's figure this out. And so I drove over to Dallas. We had 6 foot apart coffee, and I came up with this idea to put the deal under contract. Like, hey, we'll negotiate the PSA.
So let me stop you. So at that time, COVID, how many other deals did y'all have going that potentially got,
we had
bumpy, let's say?
we had launched a deal the week before and then pulled it that week.
Got it.
I mean, we probably had 3 or 4 deals out, and I'm certain we had multiple under contract,
Sure.
and I think we those all went fine. But this was the main deal we had on the market, and then we had another one that we'd already kind of finished up for the year, and then we had another one we just launched. And
Man.
yeah, it we just the whole world just pumped the brakes, right? Yeah, I mean, you had really no choice.
Deal that Friday, I think it was March 5th or 6th, and on Monday, literally everything shut down.
Yeah,
and it was like, had we failed a Monday or Tuesday, we probably would not have been able to close it. So
right,
I remember back then it was just nuts. So okay,
so
you drove to Dallas, having your distant,
6 foot coffee, right? Yeah,
yep,
and came up with this idea to I was like, hey, let's just kick the can down the road, like and I meant this genuinely.
Had you talked to the seller yet?
No,
okay.
I kind of I was like,
still trying to figure it out. Yeah,
I was like, yeah, we just need to save this, right?
Okay.
And I came across this genuinely. I was like, this is such a good deal. You can't lose this opportunity, right? Like we don't know what's going on, but this is a good opportunity. And so we came with an idea for like we're going to go negotiate the PSA, and for a small amount of money, earnest money, it'll kick the can down the road 30 days. And in the meantime, we'll be finding debt. And when everything comes back on, we'll just press play.
Okay. So you had said your initial 7 offers all had non-refundable earnest money, and that was very prevalent at the time. So you're saying, let's maybe not do a full, quick 60-day close. Let's figure it out. But for you tying the deal up, put up just a little kiss to the seller, non-refundable.
Right.
Okay.
Yeah. 5K, 10K. And then the minute
just showing your commitment to the deal through this, bumpy time that nobody knows it's going to. Okay.
So we were all locked up, right? It was like, he had a debt quote at, 90% loan to value, probably 85% loan to value at a 4% interest rate the day before. And then that day it was worth $0.
Like, yeah, off the table.
Yeah, everything was off the table. So it wasn't like, anything he did or whatever. It's like nobody's going to figure this out. And so, it was like, hey, we're not going to do due diligence. We're not going to, do this stuff. Like, we're just going to negotiate what we think we need on the PSA. And then we're just going to press pause, but they're going to wait around for however long you need through these little earnest monies.
Okay.
So we felt like it was a pretty good idea while the world was just kind of
okay. So
stopped.
So no due diligence, just
you've got basically a ROFR.
Got it. Yep.
Right.
Makes
You're paying
sense.
a little bit for a ROFR, and whenever the world comes back, you get
for those just listeners not understanding what a ROFR is, just a quick
right of first refusal. Yeah.
Okay.
And so it went 90 days, and I still hate it. I'm still very close to this guy. He's a great guy. He's a good friend. And but it was like, if we'd been able to hold on for another like 30 days, it would have just totally come back.
Mm-hmm.
Right. But it was just we didn't. And so the second time we had to go back out.
So it went 90 days, and he ended up punting and walking
away.
Yeah,
he was just like, man, I'm getting debt quotes at 8%, 9%, LOL, 2023. But
right.
Yeah. And he
I would take that today.
Right. Yeah, exactly. Yeah. 7.5, please.
Yep.
So yeah, that was kind of how. And I remember the day before my kid was born, or sorry, not the day, but the Friday before, is like my wife was going to be induced on a Monday. So that Friday, our listing agreement expired. I drove to Dallas and had lunch with the brothers at Sevy's, and we all got pretty drunk. And they were like, you're going to be a great dad. Like, you guys, like, put your money where your mouth was. No one else wanted to market this thing, and they just wanted to make a couple phone calls, and y'all did all the work, and like, we wish it had worked out, this other guy, but like, we do need to sell. So what do you want to do? And I
Let's
go,
go. Yeah.
sign this listing. So, they signed the listing. My wife had our kid. And then 2 weeks later, we
That's
launched the
awesome.
Richelieu again.
Wow, man, full circle, dude. And it's in a tough time. I think a lot of people were probably getting drunk around that time. You
Yeah.
obviously had several reasons to be, but
Yeah.
I think other people were stagnant, right? But okay, so now the second time. So from let's just say from the time that the first deal shut down with COVID, like essentially y'all were kind of signing a contract to when they signed the listing agreement. What was that time frame? Sounds like 4 months, 5 months,
Yeah,
a
it
little
was
longer.
like 5 months, just
Okay,
about. Yeah, it went from March 5th or whenever you close on your deal. It was the same day we sent that PSA over, right? All the way to August 17th was when we died the deal. My son was born on August 24th, so we would have had lunch on like, whatever the
that's
20th or
awesome,
something. And then 2 weeks after that, we
dude.
went back
This
to
is like
market.
very cool deal talk. And we're not
Yeah,
even done yet. So
yeah, I know.
okay, so um,
But the
I
cool
mean,
thing,
essentially, you guys earned it, right? Because then
that
they
was
did
the cool
sign the
thing.
listing agreement,
Yeah, they
right?
signed the exclusive listing agreement. There were a couple other people who were brokers who were really upset about that. But we risked 10, 15K that frankly we didn't necessarily get back either,
Sure.
right? I
Mhm.
mean we didn't, right? But yeah, we put our money where our mouth was, and like I said earlier, they were old school guys, and I think we kind of seem to roll old school as well, and it was just respect, right? Put your money
It's
where your
great,
mouth
dude.
is.
I love that.
Yeah.
So, okay, now we've got it in escrow. Or, well, I'm sorry,
No,
you
now
have your
we're
listing agreement, so you
yeah.
want to go back. So now, walk us through the second marketing of the deal.
The one rub was that through all of our marketing efforts, they had heard me telling people what was wrong with the property, and so they had raised their rents and some other things, and so
Interesting.
and they wanted an extra 500K coming out of COVID in middle of September. So things were picking back up by then. So it wasn't crazy, but it was funny. Like they're like,
Mhm.
well, we got 10,350. Like we think 10,500 is a good number. Very round numbers around here. And so we're like, okay, we can do it. It makes sense. The story hasn't changed, and guess what? Interest rates are 2, not 5.
Mhm.
So we went back out. I have to go to my cheat sheet here to see how many tours we had. Uh, we had 18 tours the second time, not a single overlap tour. I went and checked that.
From the first group, from
Yeah,
the first round. Wow.
right. So I didn't count any of those in my overlap. So we had
So total,
35 separate people between the
that's
two marketings
fantastic.
come through the deal, and we had
I think I was on the second round.
I think you were. And I think we had 16 offers the second time
Wow.
around. Talk about the world changing. 7 offers at 10 million to 4 months later, post COVID, 5 months later, post COVID, getting 16 offers.
Man.
Yeah.
And then, so were those 16 offers in the ballpark, or how'd they shake out?
We ended up pretty close to 11 million on
Okay.
that deal. We went well above list price again.
I think that's a little bit of an anecdote of the pinup demand from COVID, right? We
100%.
all were kind of trying to figure out what was going on, similar to today, right? With the rates being hiked, everybody's trying to figure out what's going on. And then I think as soon as everything settled and people realized, there's not this mass exodus at anywhere, apartment units, work, retail, et cetera, that, there was some certainty back in the market, and everybody, I mean, us included, started plowing forward again. So, I mean, I
Right.
think that perfectly sums up that kind of time in the marketplace. So,
No, it truly does. And it was again, and what's happening today is a little different. There's more fundamental stuff to it, but this was very unfundamental,
mhm,
just like the last year, since basically March of last year till
mhm.
now has been, right? It's a lot of it's just based on interest rates. So it's a unique story for the time. But yeah, that pent up demand comes out. We get almost $11 million, and the buyer pool is some of the similar characters, but
So were
also
there, you'd mentioned no out of state guys first time. Were there some this time?
yes,
Okay,
the person who won the deal was out of state.
got it.
What was interesting though is not your average guy. His family had owned all these properties in Beverly Hills since the 50s and 60s, and he was like, I remember my mom answering the leasing phone, and there was like the home phone and the leasing phone in their kitchen in LA growing up. And she would answer the
Wow.
leasing phone, like, oh yeah, whatever, Bel Air Street,
Hmm.
$200. So, and he owned all those same properties still. So it turns out, even though he's a full time real estate professional as opposed to an attorney,
Hmm.
he's like the same thing as the guys who own the deal.
Maybe there was like, we try not to get emotional in this business. It's a business, right? It's
Right.
not similar to single family, but it sounded like maybe he had a kind of an emotional connection to it. He
Totally.
understood it.
Yeah, he did. And guess what? The brothers also had a very emotional connection to the property. That was why they wouldn't sign an exclusive listing in the first place, right? They didn't just trust anybody with it.
Yep.
So it worked out really well. It was a good marriage in that aspect.
Okay, so California buyer, post COVID.
First deal in DFW, but he had a very good friend from college that we had done like 3 or 4 transactions with, and he was kinda consulting with him, so we had a trust level there.
Okay. Which again, back to the relationship part of this business, okay, so walk us through, we've transitioned from, source analyze, now we're into finance, kind of walk us through your escrow period again, the second time, and how the due diligence went, all that, but with, how was the buyer seeking financing to structure the deal?
Right, so we started out looking at Fannie Freddie debt because interest rates were 2% or whatever,
Sure.
and, so
Do you
he
remember like the leverage, potential leverage?
it was gonna so since it was a value add deal, it wasn't full leverage, but he was doing a 1031, and he was gonna be able to bring his own CapEx. It was his money, it wasn't, investor money or something,
Okay.
and so, um, we were gonna do like a 65% LTV Fannie loan at a low interest rate for 5 years, and I think it actually worked out really well that it was a small balance loan. I think it was like it was kinda right on the cusp of being a small balance loan or not, and so
Okay.
it anyways, we started going that route, and then it just didn't work, and so we went back, but we were still kinda waiting for this bridge financing thing to kinda come back, and
Mhm.
we hadn't done a ton of stuff on bridge prior to that, but it was kind of this, coming back in a little bit. Funny now, right? But
Yes.
so we go to
So
85%
okay,
bridge
so
financing.
he's doing a 1031 exchange, tax deferred exchange. It's its own money, no investors. Loves a deal, very similar to what he's grown up with. Was trying to get agency financing at a low interest rate and also do capex, but
Correct.
given that he was also having to do capex, that was pushing down the loan to value on the loan.
Right,
Correct.
but he was willing to bring that capital,
Got it.
initially, and then it didn't work out to get the Fannie loan. Um, I'm not gonna go into all that, but it
Yeah,
was
that's fine.
but we went to, 85% loan with Arbor, on a bridge execution. So, the longest deal in the world, right, ends up maybe not more, but ends up needing another 45 days, right?
Mhm.
We're 40 days down the road with Fannie, and you're like, "Oh, crap, it's not gonna work." So,
Yep.
go back out, get the bridge financing, that really executed
So
pretty
was
well.
that within y'all's time frame of the escrow period, or did he have to request extensions, put
Yeah,
up
we had
more
to
earnest money?
yeah, we had to request extensions
Okay.
and put more on this money up.
And what was the seller's thought process on all that at the time?
Man, the longer I can own the Richelieu, the better.
Okay.
Yeah, he
They
wasn't too
love
worried
that
about it.
place.
Yeah, I mean, plus he had to go find office space, and
True.
he'd
Yeah.
been a little lazy about it, and I kept every time I'd be there, I'm like, "Hey, man, you gotta go. Where's your new office gonna be? Have you seen
This
any
is
spaces?"
selling one
Recently?"
day. You
Yeah,
need to
exactly,
make plans.
exactly. And so, but yeah, it was. I mean, it was very gentlemanly, right? In that sense, like they were in no hurry. On there.
So, okay, so he was going to do some capex. Let's just say it was that 25 a door, 2.5, 3 million bucks, and um, so he went to Arbor and got an 85%. Now was that a LTC, which is loan to cost, or LTV?
Yes, loan to cost.
So post COVID, there were a lot of bridge debt providers, most of them were debt funds coming to the market, willing to kind of fill the gap for agencies, small balance banks, local lenders, and provide this kind of high leverage renovation financing. Right, you couldn't necessarily get it on a stabilized deal; it had to have a renovation component. So, do you remember? What maybe the total loan dollars were? What was the interest rate at the time? Were there? You said it took 45 days. Kind of walks through that.
Yeah, I think I mean, the total loan dollars, it was 85% loan to cost.
And was this with Arbor? Was it recourse,
It
non-recourse?
was non-recourse.
Okay.
Yeah, non-recourse, and 85% loan to cost. I want to say the interest rate. I mean, it was a floating rate deal, so it was probably somewhere around like 3.75
Okay.
to 4. Would have been at the time, and yeah, he had budgets and plans, and the only thing that was a big sticking point during due diligence is the seller said that he had fixed the roof, or 7 of the 10 buildings roofs, and so I'm walking around telling these people, "Oh yeah, 7 of the 10 roofs are new." Well, we get into due diligence, and his maintenance guy had done the roof with the TPO, like
I mean, that's fixed.
pulling it like
No.
like a rug. It's like me pulling a rug around or something.
Yeah.
It's not right.
Yep.
Um, but that was the only point of contention, but it worked out.
Worked itself out.
Worked
Got it.
itself out.
Okay.
But it was kind of this onion. It wasn't the only point of contention, maybe, but it's this onion you keep every time you walk in. There's like another old thing that you're like he didn't mention or whatever, right? Yeah.
Sure.
So, but it all worked out fine, and they closed on the deal. I have it written down here. Oh yeah, we closed in March of 2021. So we went literally a year and 3 months from the first time we signed a fee agreement, the non-exclusive listing,
Mhm.
all the way to the end, to when we
Wow.
closed.
So total, you met these people in 2014, 15, started working with them in 2019, add another almost year plus. So total, you're 7+ years invested into this deal just to see it through to the finish line.
Yeah, it paid really well per
I was gonna
hour.
say, listen, but it paid good, right? Of course,
Per
and
hour. No.
yeah, per hour, maybe not good, but per hour.
It was really a badge of honor
Yeah,
getting it done. I would say it's probably, when you asked me to do deal talk, this is the first deal that hit my head. It's
that's
probably my favorite
fantastic.
deal of all time.
That's
I would
great,
live
and
it.
and
I
that's
would live
part of
there.
deal talk is that if you everybody loves to talk deals, and people know that one deal, like, oh, I remember this one, right?
Yep.
And so that's it. It's just like, let's hear about your fun deal. But as we've talked with other guests, like every deal has a story, right? Okay, so they ended up taking about a year to close. Um, I mean, have there been other deals that you've worked on that have taken a year, over a year, 6 months? It's not typical, but it does happen.
Yeah, I think really not until last year, with your deal,
Yes.
and we had another one that took about 8 months, and we weren't able to get it done either. So, but for the most part, the longest ones we've had are usually 5 or 6 months, and that's,
Mhm,
like I said, on the long end. But this was one of the longest ones. And then there's certainly deals that we've known the person for 7
mhm.
years and happens then.
Bit of
But
work, yeah,
right,
got it. Okay, so that's again the F. Now we talk about the exit, right? Really, it's the framework. You should work backwards because if you don't know your exit strategy up front, then why are you going to
yeah.
invest in a deal? So, what was his plan? Did he actually end up wanting to do this 25,000 a unit? And was he planning on doing a disposition? Was he planning on refinancing it? And as you guys were in the market selling this deal, where you said, "Hey, this is a 24-month deal. This is a 5-year, kind of 60-month timeline." How did you guys approach that? And what was the buyer position going to do?
So this was where probably my bias came in the way a little bit, from my, like, I love the neighborhood, love the deal.
Sure.
So I was telling people, you fix it up and then you keep it forever, right? Like, that's what I would have done.
Mhm.
Keep it forever. But some people saw it that way as well, right? Everyone had a different opinion, but for the most part, people saw an opportunity to come in, do something quick, and then get out within, call it, the 2 to 5 year time frame. Um, what I always told people was, you should buy it, do that work, and then let 10 other $1 million houses come up, right?
Mhm.
Or whatever, not 10, 10 years worth of $1 million houses, right? But he had a similar thought process as that as well, and that was one of the reasons that he won the deal. Like, there were multiple people at the same price, and we had to do seller interviews and things like that. Um,
Guys that wanted to kind of fix it, flip it, you know,
right, be there for
grow
2
their
years,
grow their capital,
right,
take it, move on.
make a good
Sure.
return,
Mhm.
and hey, that's great. It made a lot of sense. The deal was ripe for it,
Mhm.
and so he saw it a little differently, but plus it was his own family money and his money, right? And his family had owned everything for a long time, so that was just his business plan. And so but in general, right, his exit was probably to refi it into long term debt and hold on to it. And so he's going through that process. It has put in long term debt on the deal.
So, so he's already refinanced, or he's in the middle
Yeah,
of it, and then just plans on holding it, right?
right.
That's all. And so, do you know kind of what leverage? Do you know if he, was able to cash out his initial capital? If you have some insight, that'd be great.
Yeah, I don't have exact
Hmm.
answers on that, but I do know he was getting somewhere around like 70% on his new evaluation
Hmm.
after he'd spent. I mean, KP, you should see the pool at this place, man. It is so cool now. It is
uh,
not. I love. I always joke with my wife. I'm like, if we ever get divorced, like, I'm moving to the Richelieu. Like, it's just like big units, a little old school.
uh,
But this pool now, it has, fountains and
okay.
cabanas, and it looks like a Beverly Hills style
So,
thing.
so do you find through this refinance, like, do you find that he executed the business plan that you were selling? Was he able to put
Yes.
in the capital you thought, fix the deferred maintenance items, and then achieve that $400-500 rental premium?
Yes. So actually, I went back on their website and looked at this right before I walked in here,
Mhm.
and they're renting their 2 bedrooms out for 19 $1,990, so 2 grand. And our pro
Wow.
forma was, I think, 1,300 or 1,400 bucks.
Hmm.
And I always told people, I think you can probably get 16 to 1,700
Hmm.
for these, but now they're getting $2,000 for their 2 beds.
Goodness.
Yeah, and $1,400 are pro forma for the 2 bedrooms.
Mhm.
We're getting $1,400 on their small 1 bedroom now.
So rather than 4 or 500, I mean, they're pushing 750 to 1,000.
Right.
I mean, on there.
Correct.
Um,
The deal looks exactly how I think I would have pictured it in my mind's eye
sure.
when it's funny how it worked out like that.
Now I'll say I have not seen it post Reno, so I definitely love again a good deal story, deal talk. I'm gonna go look it up when we're done. But
We should have done a live spot.
yeah, no, 100%. So, well, I would say, yeah. I mean, anything else to kind of add to wrap it up on this? I mean, this has been look as far as deal talks go, unique deal stories. I mean, this is definitely at the top of the list, right? It's not just kind of a down the fairway. Oh, we did a deal. This has a lot of hair on it. You went through COVID. Multiple buyers, obviously a seller that was very emotionally attached to the property and then raised the price on you. And just, you guys had to take on a bunch of hurdles to get it done. And, I mean, respect for being able to see it through. Not a lot of guys in our business do that. They're, I always call it like, being a dog on a bumper of a car, right? You just hold on till it's done. And
Right.
I mean, that's literally what you guys did. So it's very cool. So yeah, anything to put a bow on it, wrap it up, wrap the deal talk up.
Um, no, I mean, I feel like we definitely covered most of it. It's one of my favorite deals. I mean,
Yeah.
it's I after I'd finished up some property tours, I'd drive like 8 minutes to my folks' house and like see them for
Just
20
hang,
minutes
yeah.
afterwards. It was just
Super cool.
it just hit me perfectly, right? It was
Yep.
just like the perfect deal for
Is the
2019 Ford.
is the Toro place still there?
It sure is. Yeah, it sure is.
Awesome.
Yep. And so it was a fun deal, and I loved the family that I worked for too. As I got to know them really well. Unfortunately, the brother did end up passing away from cancer.
Goodness.
That was really unfortunate,
Yeah.
but they were great people. It started out contentious. We weren't allowed to be seen on tours. We had to like sneak in and out of units, and by the end of it, we were getting drunk the day before my son was born.
Yeah.
Right?
Build the
So
trust, man.
build
That's awesome.
trust, and they're just great people.
That's great.
They deserved you know the outcome on that deal. And the buyer's such a great guy too. And it was his first deal in DFW. Now I think he's done 5 or 6 more. He's been really successful on all of them, and it was kind of the right deal at the right time. It's funny.
Mhm.
It's funny how it works out.
That's great.
So yeah,
Well, that's a deal talk, man. Super cool.
thanks, man.
So I've got 3 questions for you, and then we're gonna do something fun.
All right.
So first question: what's one thing that you would change about the multifamily business or industry if you could?
Hmm. Well, I came prepared for that one. Uh, Man, yield maintenance on loans would be great, or just fixing the spreads between 5, 7, and 10-year deals. So even if the treasuries are different, it's pretty consistent throughout the 3. I'm sure there's some horrible ramifications for that.
Spoken like a true deal guy.
Yeah, exactly. Yeah, I just want it to be easier to do deals.
To do
Yeah.
deals. Okay. That's unique. I've not heard that one yet, but I would agree with you. I would like to see both those as well.
Yeah.
I think that would foster velocity, right? It would foster deals trading, people being able to, being out of deals a little quicker, buyers being able to, buy deals quicker, easier, et cetera. So yeah, very interesting. Okay. Next question. What advice would you give anyone in the business or industry or trying to get into the business or industry?
I think that whole story at the base end of it was probably about pleasant persistence. So word to Al Silva on that. But I think that it really is that's probably the biggest thing. It doesn't matter if you're selling, pin cushions or Class A apartments in Uptown. Pleasant persistence is going to get you where you need to go
That's great.
just about everywhere. And that's where people are going to appreciate you and respect
no
you.
unpleasant persistence.
Unpleasant persistence is not,
It's not
it's
good.
kind of frowned upon.
Yeah.
Yeah.
I
But
like to
there's a time
say,
and a place
the
sometimes.
squeaky wheel gets the oil, right?
Yeah.
So just always kind of be in there. So that's
Right.
good. Pleasant persistence. Got it. And then last question, it's kind of 2 in 1, but where do you see the multifamily industry heading in the next 1 to 3 years? And then in the next 5 to 10 years?
Sure. I mean, I think the next 1 to 3 years are going to be, continue to be difficult. I think some discovery, certainly more on the 1 year end of that, just kind of understanding what's happening to the fundamentals that we have, right? In the apartment industry, specifically in DFW. So, I think we're going to learn a little bit like who were the good operators, who put the money in, who had the vision, right? Who did what they said they were going to do.
Mm-hmm.
So I think that's what we're going to see in the next, short term. But I also do see, the resiliency of DFW, the resiliency of apartments, right? The need for housing. And I think, by the end of that 1 to 3 year period, we're talking about, being in a strong fundamental place again,
Mhm.
right? I think the generational shift that Dallas has been on, like we talked about at lunch earlier today, it's still here, right? It's still coming. So that's where I see it in the short term. In 5 to 10 years, I mean, I probably see a ton of development, right? I think eventually we're going to see some of these older properties be scraped, build new.
Mhm.
But also, I think there's a whole technology factor in the B and C space that has not kind of become super cost effective yet. So I think that's what I'm looking forward to in the next 5 to 10 years is utility technology and so utility savings and things like that
Mhm.
that are kind of solar. It's hard to do right now, things like that, and the technology space that make probably make some of these properties more viable than they
And
have
more
been.
efficient,
More
right?
efficient,
Mhm.
exactly. Yeah, utility efficiency really grinds my gears.
Yeah.
Yeah.
Well, that's it. Yeah. I mean, a great answer. Again, general question. Get your take on it. So let's do something fun.
All right.
So this is my segment that I like to call buy or sell. Okay. So buy means you like it. Sell means you don't like it. Just 10 rapid fire, uh, you know, topics or scenarios or something, and just get your quick take.
Sure.
Cool. And then we'll wrap it up. All right. First one. Ready? Pickles.
Sell so hard. So hard.
You don't like
I
pickles?
gag when I smell a pickle.
Interesting. Okay.
Yeah.
I love pickles. I'm judging you right now too.
My good buddy David Dix one time he said he and I went to lunch and we ordered a burger and I had pickles on mine. I was like,
Yeah.
trying to get it off, and he was like, "What?" And then I told him thing, and then he goes, "If I don't get this deal that we're about to tour, I'm gonna send you a jar of pickles."
Pickles.
He didn't get the deal, and sure enough, a week later, I get like a big box. I'm like, "Ooh,
Oh,
what
I
I get?" And I
love
open it
that.
up. The most exotic pickles I'd ever see.
Oh my
It was
gosh.
hilarious. So
And you
kudos
still
to
have
David
it?
Dix. No, the pickles went in the trash pretty quick.
That's great. Okay. Next.
That's hilarious. That's the first. It's like
Yeah.
that's my big thing.
I'm so glad you had that reaction. That's fantastic. Cool. Selling pickles. Tesla stock.
Um, so
Selling Tesla stock. Okay.
I need some
Uh,
more. I need some more hard asset under that.
yep.
Yeah,
Okay.
real estate guy.
A 58-degree lob wedge from 70 yards.
I'm buying that because that probably means KP's sending it in the hole. You're jamming it in the cup for that.
That one's for
Nothing.
you, dude.
What was the name of that club again? It was the Ping.
Yeah, it's the Callaway Sure Out.
Sure out. Yeah,
So, yeah, man.
nothing. I've never. I don't think I've hugged anyone other than my wife that hard since when you made that shot.
What was that? Was that was it eagle or birdie? I
I
don't
don't know.
remember.
It was what
We
it was
all
what the
lost
scramble team needed.
it. Yeah,
That's what it
it's
was.
100%. So I'm hanging my hat on it. How about that? Okay, Chris Beard.
I mean, sell.
Okay.
Unfortunately, but I do respect the hustle that guy had and what he did for Texas Tech. So I did not dislike him when he went to Texas, but he's made it a little harder since then to
Sure.
get on his side.
Okay, I thought of that one for you.
Yeah, I
Tech
appreciate
guy,
that.
Okay, traditional dress shoes like Oxfords, lace ups, etc.
And I mean, I'm wearing some loafers right now. So, but normally I'm gonna sell. I'm normally a pretty big tennis shoe guy.
Okay.
I'm a casual fair guy.
So that was the next one: casual dress shoes, sneakers, etc.
Buy hard.
Same,
Yeah.
100%.
Buy hard.
And it's headed that way for the last 2 years. I love it. It's like great. So
The greatest invention are those like Cole Haan tennis shoes that are like leather.
mhm.
I'm like, what? It's the perfect
It
confluence.
is. It really is. Okay. Next, agency debt.
I mean, I'm buying, right? It's the backstop of our economy, or not our economy, but of our business, right?
Mhm.
And it serves a need for people buying single family homes and people buying apartments and not ripping off their tenants, right, or
Mhm.
whatever it is, right? It's a good backstop for the country and for multifamily. So I wish interest rates were a little bit lower, but that's not Fannie and Freddie's
Mhm.
fault.
Great answer. I'm buying too. Okay. Chick-fil-A.
Buying.
Fine.
Yeah. I don't have time to start a franchise because I don't have time to work behind the counter for a while, but I would buy one.
A beach trip.
Buying. Going to Kiowa later
Beach.
this year.
Okay. Like the beach. Some people don't like the beach.
What about you?
know? Oh, beach trip. Yeah,
Yeah.
for sure.
Oh yeah, you just went on one.
Mm-hmm. The last one, work from home.
I mean, this is something I wish I could buy, but I probably have to sell working from home. I think it's I usually end up doing laundry or something. So, and I know I work pretty hard at it. So
So when you get distracted, instead of playing video games, you go do laundry is what
yeah, pretty much. Yeah, pretty cool, dude. Yeah, we should hang out on weekends.
It's awesome. Very cool. Well, that's buy or sell, man. We appreciate it.
I
So
appreciate you having me on.
absolutely. Dude, that wraps it up. Multifamily deal talk. We sincerely appreciate you being here. I mean, that, deal story is one for the books for sure. For anybody in our business, buyer, broker, lender, mortgage broker, anybody, right? So it's very cool. Again, respect the hustle of you just staying after those people and seeing it to the finish line. So
Thanks, man.
yeah, dude. How can listeners connect with you?
Yeah, so you can find the Silva Brawley multifamily team. We've got a website, www.silvamultifamily.com, but it's myself, Al Silva, Dylan York, and then Brenna Lindsay, our team. And you can call me anytime at 817-932-6135.
Perfect.
Perfect.
Cool, man. Well, again, we appreciate you being here. And that wraps up Deal Talk.
I appreciate being
Thanks,
here.
dude.
Thanks, Kevin.
Mhm.